Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. We're going to go ahead and talk about some of the latest news stories over the past week in the cryptocurrency market. Let's go ahead and jump right into the crypto market update. As you can see, Bitcoin is currently trading at time of recording at around $88,723. So it's down just under 3% over the past week. We have Ethereum still holding on above 3,000 at $3,096. It's down a little over 1% over the past week. We have XRP down 5%, Solana down 4% at $130, Dogecoin down just about 5% and trading at 13 cents. And then we have Cardano rounding out the top 10, down a little under 8% at 39 cents. So if we look at the Bitcoin chart, we're still trying to make sure that we see if Bitcoin is able to stay in this range. It did dip below 76,000 earlier in the year, but we're seeing that since we've had volatility over the last several months, Bitcoin did get down to $80,000, and we're seeing if we're going to stay in this range here in the $80,000 to $90,000 range, or will we actually get a chance to get a pump back up above 100,000. We could see it potentially over the next couple of weeks before year end. It's definitely possible. Bitcoin has done extraordinary things in short periods of time, but if not, we'll definitely look to see what happens in the first quarter of 2026 to see if we continue to stay range bound. And if we do, it's actually not a bad thing that we've discussed in other videos, because we'll basically continue to be in an accumulation range, and then maybe over time we'll see that Bitcoin will continue on kind of this stair step type of trajectory, where then we'll see potentially another all-time high in 2026. Normally, if we go by the 4-year cycle, which a lot of people are saying the 4-year cycle is dead, which basically correlates with the Bitcoin halving, which happens basically every 4 years. Usually the year after the halving is when Bitcoin goes on a bull run, and then that following year after that is when Bitcoin goes into a bear market. So if we go with that cycle, then 2026 would be a bearish year. But a lot of people believe, a lot of speculators believe, that Bitcoin could potentially reach all-time highs, or at least get back to all-time highs that were set in 2025 and 2026. Obviously, that remains to be seen, but of course, stay tuned here at Networkchain and we'll keep you posted on that. One of the biggest news stories over the past week is that Jerome Powell, which is the chair of the Federal Reserve in the United States, they have now done one other cut. So this is now 3 cuts to the interest rate, also known as the federal funds rate. So they've done a total of 3 in 2025. As you can see, over the past 5 years, we had the highest rate hike cycle after the pandemic, when the federal fund rate basically was less than 1%. And then once we had an issue with inflation, as prices continued to go up in price, then the Federal Reserve decided to move forward and do a quantitative tightening cycle, and in that's when the interest rates were increased tremendously over a couple of years. And now we're seeing that the interest rates are starting to fall back down a little bit incrementally, as you can see. And so now we have a effective rate basically between 3.5 and 3.75%. So you can see here, as of close on Friday of last week, on December 11th, the rate effective is at around 3.64%. As you can see, it's about a 0.25, which was the 25 basis point rate cut that was made last week on the 10th. So it went down 0.25%, which is basically 25 basis points. So people believe that also, with the fact that the interest rate is now going down with these cuts, usually that is a good sign for riskier assets, because basically now you're not getting as much return if you're having your money in, say, a money market account, for example, where it's basically following the interest rate of the federal funds rate. And now we're seeing that is going to be lessened. So people usually are going to take some money out of those type of vehicles and potentially put it in riskier assets, because that's when you are able to yield larger returns. So we will see if that happens with Bitcoin. Usually when the interest rates go down, we see more liquidity that is coming into riskier assets like the cryptocurrency market, as well as tech stocks and things of that nature. So obviously we shall see There's a possibility the U.S. Federal Reserve will not cut anymore in 2026. If they do, there may only be a few cuts. We shall see. Obviously, time will tell, but of course, we'll keep you posted here on Networkchain as that information becomes more available. So, we're still seeing that the cryptocurrency market is continuing to see expansion in traditional finance. YouTube, which is one of the largest streamers in the world, has now launched an option for U.S. creators to receive stablecoin payouts through PYUSD, which is PayPal's stablecoin. It is on the blockchain. And it is a Ethereum blockchain based token. And so you can see here that big tech continues to tiptoe into crypto. Actually, they're really starting to come in full-fledged ahead as we see more and more news stories, more and more institutions, more and more firms that are not only investing into crypto directly, but having the optionality for their clients to also get exposure to these crypto assets. So you can see YouTube is going to allow their creators to receive payouts in the PayPal stablecoin. And a spokesperson for Google confirmed the video site has added payouts for creators in the PayPal's stablecoin, but they haven't commented any further. So we're seeing that the interest in stablecoins comes as Google and other big tech companies have shown interest in cryptocurrencies amid a wave of hype in Silicon Valley and beyond. So you can see that the tokens, which are pegged to underlying assets like the US dollar, so it's basically tethered 1-to-1. USDT, if we go back to our cryptocurrency chart, you can see USDT is the largest stablecoin of them all currently, with around $186 billion in market cap, basically $186 billion in the stablecoin. And then also USDC, which is the second largest stablecoin, has about 78 billion circulating. And so basically it's pegged 1-to-1, so one stablecoin is equal to one USD. So if a creator were to get the equivalent of $350 in USD, it can also get 350 USDC, and in this case with YouTube they are using PYUSD, and that's also pegged to the US dollar 1-to-1, so they would get 350 PYUSD. So we're definitely seeing an expansion of stablecoins and blockchain-based tokens in traditional finance. Also, Interactive Brokers, which is one of the largest trading brokerages in the world, they are now accepting stablecoins. So clients will be allowed to use stablecoins to fund their accounts. And one of the reasons why stablecoins is so important is that it basically provides more transparency using the blockchain. It's an open ledger, just like Bitcoin is an open ledger for everyone to see. So you can see the transactions that are actually happening in real time. A lot of times, obviously behind the scenes, when we're, sending money peer to peer from, say Zelle, using Zelle, for example, from my bank account to another person's bank account, we don't see what's going on behind the scenes, but sometimes it doesn't actually settle except until a day or two later. And so with the stable coins, these transactions can actually settle a lot faster, usually within minutes, and you can see it actually happening on the blockchain, so you would be able to track exactly where your money's going. And so that's one of the many basically benefits of using the blockchain. And also, of course, it comes down to money, and the fees are a lot cheaper when it comes to using blockchain as opposed to traditional payment rails. So you can see here, Interactive Brokers will now be accepting and allowing retail investors to fund their brokerage accounts using stablecoins. And the firm, which competes with other brokerages like Robinhood and Schwab, has also expanded to cryptocurrency trading capabilities alongside their other offerings of stocks, options, and futures. So we're just seeing that crypto is continuing to infiltrate the traditional finance markets, and we're seeing that a lot of these firms realize that cryptocurrency has a major demand, and so they're now offering their clientele the opportunity to have exposure to cryptocurrency. Also, we talk about conviction and how if you're convicted in a particular asset and you continue to add to that asset and you believe in its trajectory over time, and that will continue to add and bring yield to you, then strategy is a perfect example of what conviction really is. So they just spent almost $1 billion last week. We'll find out this week if they've spent any more US dollars to buy Bitcoin, which is a hard asset. They believe they're taking advantage of this arbitrage by using US dollars to put money into a hard asset, which is Bitcoin. So you can see now their total is at 660,000 Bitcoin. 21 Capital is now on the public markets. They opened up on the public markets this past week. They merged with Cantor Equity Partners, and they now have a total of over 43,000 Bitcoin on the balance sheet. And they also have plans to continue to add to their Bitcoin treasury. So we continue to see more Bitcoin treasury companies being added to this list. Of course, the Bitcoin ETFs continue to do really well. The Ethereum and Solana ETFs have been seeing a lot of inflows also over this past quarter. So we're just seeing that demand continues to come into the cryptocurrency space. So for us, despite the recent price action and volatility that we see with Bitcoin and some of these other crypto assets, we believe that seeing the demand and the opening up of the markets to cryptocurrency is just another indicator that the future could be very bright for this nascent asset class. Of course, continue to stay posted with us here on X as well as YouTube and Instagram. We really appreciate it. And just something we saw recently, Bitwise, which is a crypto native firm and asset manager. They have been marketing Bitcoin as well as some of their other index funds that include various crypto assets. And we just thought it was kind of cool that they basically painted Times Square, which is one of the most popular intersections in New York City, and they basically painted it orange with a bunch of Bitcoin advertising regarding their Bitcoin ETF. So we still are seeing that the interest is flowing into Bitcoin and into cryptocurrencies. So continue to stay posted here with us here at Networkchain. And of course, we look forward to linking up with you soon on the Networkchain. In the meantime, take care. Bye-bye.